This is In the Money with Angela Miles.
Market's in a happier mood on this May day, but Chesapeake still having some troubles. Hello everybody, I'm Angela Miles. Let's get down to it and take a look at what's going on with Chesapeake right now. I'm watching all the way around to see what's going on in the weeklies as well as those traditional options. The stock has had an interesting day. It opened up right around $20. As we're going to tape, it's right around $19. Word is getting out that it looks like the company is ending early that program that made possible for the CEO to borrow against his stake in some natural gas wells. So that was a lot of concern. I talked about on the show yesterday, people thinking maybe there was some conflict of interest there. There's a heavy volume happening right now in the options. It looks like the May 19 and 20 calls are especially active in the weeklies. The volatility remains high. It's right around at 85. In the traditional options, the volatility's at a 54. The May 20, 21, and 22 calls are active there. On the put side, in June, some put buyers are emerging. They want the 17 strike. The volatility rather high at 64, meaning people are paying up. Those June puts are expensive. And in July, it looks like the July 25 call buyers are still in the market that I mentioned yesterday. The volatility there lower. It's at 41. Moving on to Pfizer. A lot of people did not like what they heard in the earnings news. There was actually a miss for Pfizer. The May 23 calls are getting some activity. Those are in the traditionals. The stock is trading 27. Those seem to be call sellers as people are trying to adjust positions and even exit positions after not making the money that they hoped to on Pfizer's earnings news. Moving on to Whole Foods, watch for earnings from this one this week. The stock's trading right around $84. The 85 calls are active in the traditionals. LinkedIn also has earnings. LinkedIn comes out on Thursday. Stock is trading right around 108. The puts are predominantly active right now as we're going to tape in the 90 and 92 strikes. On the call side, there are some May 120 call buyers, but not as heavily as those people are positioning on the put side. Again, those are the traditional options. I will be right back in just a minute with Trader Talk after this quick break. Traders are perking up for Green Mountain's earnings that come out after the close. Andrew Keene, president of KeeneOnTheMarket.com, joins me now. And I know you like to wait until the close or closer to the close to put on a position, but what's your trader instinct telling you, especially on the heels of Starbucks' weakness over in Europe?
Yeah, this is one of the stocks that I think is getting a nice little pop into the earnings, and then I think it will sell off on earnings. So I will be looking to put on a put spread later in the day. I think this is very similar. It looks like a very similar chart to Netflix or to Deckers, where it sold off pretty hard. Looks like it made a low, got a nice little pop back, but I want to take advantage of this by getting short, but I will always define my risk versus reward, so I'll probably put on a put spread into earnings.
Now, are you going to be doing this in the traditional options?
I'm probably going to do the weekly so I can play the event. I like to play the weekly so they're over and they're not over, so I can get them off my sheets and move on to the next trade. Starbucks did have some relative weakness. Starbucks ran up as well into the quarter, and then it sold off when the announcement came out. I think Green Mountain has a lot of competition going forward. Starbucks is going into the K-Cup sector, and then we also have Dunkin' Donuts getting into the K-Cup sector as well. So even though it might look cheap on a PE number versus Starbucks, I think it's actually going to be trouble because they have a lot of competition, and we've seen this in Groupon, we've seen this in Netflix. Increased competition is very, very hard for some companies to sustain.
All right, on your put spread, I know you're waiting for the exact positioning, but can you give us an idea where you think those strikes will come in?
Well, I think the stock's $48, is that correct? So they'll probably be, I'm going to look at the measure move. This is how I always play it, and I look at the measure move. So if the at-the-money straddle is a $9 straddle, I try to sell the puts that are $9 away. So I would look to see how much the at-the-money straddle is implying the move, and I did this in Apple, worked out very well. I did in Netflix, worked out very well. I did in Amazon, I did a put fly in Amazon. Amazon obviously took off to the races, but I will figure out how much the measure move is by calculating the at-the-money straddle in the weeklies, and I'll be looking to get short the measured move target.
All right, thanks for your time today. That's Andrew Keene, president of KeeneOnTheMarket.com. Well, stay tuned for Green Mountain's earnings after the close. That's a wrap from me. I'm Angela Miles. I'll be back